Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so daily chart, and here's your 2174 limit down from the other night. It was one of those limit downs, and I talked about it in the room at the time, and I talked about it in the evening webcast. It was one of those limit downs where it's like, look, there's very little risk and a whole hell of a lot of reward if when they started to bring it back up off those lows to get long, with a hard stop underneath in case they took it back down. So we've spent the majority of the last few days long in a variety of aspects. We had one really nice short yesterday down from 79, but when it got to about 2 in the afternoon, it hit the opening print of the day down around 46.47, about 2 p.m. 46.5. Then it converted volume weighted average price in and around 50, and we ended up long 59 and had a really, really nice move back up to retest this 24.99 area that printed last night and printed back here on Friday. Now they rejected it from 2,500 back down to 2174, back up to retest it, and we're pushing back now towards the weekly pivot. I've talked in the room and on a variety of webcasts about the potential of carving out a very, very wide trading range or a very, very wide triangle as we work through all of this news and, the medical news and the economic news and, just all the geopolitical data points that are going to be coming in. You got a jobs report coming up a week from Friday. That is probably going to be the ugliest jobs report in the history of job reports. So, getting into a trading range or a triangle, somewhere in the 300 and 350 handle range isn't all that unreasonable, and it's pretty damn tradable if you think about it. Unless you're idealistic and you say to yourself, well, it has to be this or it has to be that. A lot of people got caught down here over the tips of their skis below 2200 that wanted a lot more, that wanted this move to be more than it was, and this is really where they fell on their face. They go ahead and they print that 2179 around 11 o'clock, and then you get the pop, you get another higher low. Then there you are. You got a series of higher lows, and it spends all day yesterday walking up on the promise of some kind of a deal. As we get into today, you see where the 9-day is, you see where weekly pivot is, you see 23.92. We talked yesterday about how this area was going to need to get challenged. They were need to get over the top of it. Well, the bulls have gotten over the top of it. If they can stay over the top of it Wednesday, then Thursday, Friday, theoretically they would have tape control and would be able to have some directional days to the upside Thursday, Friday. So we're still battling here on a Wednesday. But considering where we've come from versus weekly pivot, the fact that we're still here, we've been below it by 200 handles, we've been above it by 100 handles, now we're back. So there's still tremendous volatility. And, control and the victor of the week, it's still up for grabs on a Wednesday, which is, like I said, it's great volatility. The bulls don't want to spend too much time below the hourly mid-band, which is coming in around 24.25. Volume weighted average price is now up at 24.37, 24.38. Our proprietary moving average is up around 24.50. Here's your battle zone. I'm expecting a whippy, choppy open. We took our long runner off. At least I did, up at 24.50. Obviously, I left a little bit on the table there, but that's going to happen in these kind of tapes. I'm flat now. I'll be flat from now until 9:30, and then we'll put a setup out in the room and just try to see what we can get going against this 2400 area. There's still a lot for them to fight about. There's a lot more data points, but tape control of that area, I could turn a 5-minute webcast into a 20-second webcast and say, look, you got the roundy, you got the 9-day, and you got weekly pivot all jammed in around 2400. You win that level, you win the day. You win that level into tomorrow, you win the week. So we're battling over the rest of the week right now. In a great big wide triangle like this for a while, that's good for the market. It's not bad. What you don't want is you don't want to retest here. You don't want to establish 2,500 as absolute resistance and crack it to the downside. So they're going to try to avoid that. We'll see. Price is price. Don't get dug in. Don't be idealistic. Don't want your theory to be right more than you want to make handles or more than you want to respect risk. Because that's how people get run over. That's how people blow up. Don't blow up. Use your brain. Respect risk. Respect price in this tape. Trade the 10 handles in front of you, and the next 10 handles will present themselves. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Trade them well. I'll see you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.